Let's break down the news about the Donald Trump SPAC. SPAC stands for Special Purpose Acquisition Company. On March 22nd, 2024, there will be a vote of shareholders of Digital World Acquisition Company, the SPAC, to confirm or vote in favor of or against the merger with Trump Media, which controls Truth Social. Now, Truth Social, based on its most recent financials, had a total revenue for the 9 months ending in September 2023 of about $3.7 million, about a $10 million operating loss, and somehow interest expenses near $37 million. And Digital World Acquisition Company, the SPAC, when it set out in 2021 to find a partner to have this business combination with, said that it was looking for a company that could be valued at $500 million to $2 billion. And my opinion is, looking at the financials and balance sheet of Trump Media, it doesn't come anywhere near the criteria that was set forth by the Special Purpose Acquisition Company. But nonetheless, the Securities and Exchange Commission has at least approved the ability of this entity to go public. I mean, ultimately, the Securities and Exchange Commission previously had an enforcement action against the SPAC based on impropriety that resulted in a settlement agreement and monetary payments being made. But, essentially right now, it's going to be the market forces that look at Trump Media when it merges with Digital World Acquisition Company to derive a value. So I'm sure you saw the headlines that are saying that Donald Trump's stake in this combined entity could be valued at somewhere between $4 to $5 billion. The first question is that yes, for now, that is accurate. And where do you get to that number? Well, the current trading price on the market of Digital World Acquisition Company is somewhere between $45 to $50 a share. When a special purpose acquisition company, in this case Digital World Acquisition Company, first announced that it was putting its blank check company on the market, the shares were at about $10. And so if you do the math, with Donald Trump having more than 70 million, 75 million outstanding shares, he accounts for more than 50% of the outstanding shares. He's a controlling shareholder, and you do the math, and that basically comes to, based on the current value, the current trading price of Digital World Acquisition Company, which will be merged into Trump Media, the valuation of Trump shares will be, for now, around $4 billion. That is accurate. Now, when you are an insider in a deal like this, there are certain lockup conditions that exist. So when and if this merger officially takes place, and if the shareholders vote for the merger to take place on March 22nd, Donald Trump would not be able to sell his shares or dump his shares right away. He's going to have to hold on to those shares for at least 6 months. And he can, I suppose, try to come up with some end run around that. But the moment he tries to dispose of the shares, I think you would see the stock price, tank almost instantly. And after 6 months, if Donald Trump starts selling the shares kind of right away, he, of course, will be governed by all of the kind of insider trading criteria that exists and the insider trading laws that exist. Also, the moment he starts dumping his shares, I think you will see a, significant decrease in the stock price. And my opinion is the stock price will tank. Frankly, if the question is, Ben, do you think that this is ultimately going to succeed? The answer is, my opinion is that Trump Media, my opinion is that it's going to be an utter failure. That this is going to be another Trump bankruptcy, is my opinion, and that retail investors are going to get absolutely screwed. In my opinion, this is the worst case nuclear scenario for retail investors right now, where you have this stock, in my opinion, that looks like this, that looks like a meme type of stock that we've seen before, where the valuation on the stock market is in no way tethered to the actual company's performance at all. And so it lives and dies based on this battle between the short sellers, the short squeezers, the people who are on the message boards, the to the moon, folks, and this kind of gamesmanship that's taking place versus not being related to any underlying value. And I think ultimately that results in a disaster for shareholders who are playing this dangerous game and who think they're going to get rich off of this. I mean, I think this is, in my opinion, this is doomed to fail. And by the way, we've seen this with special purpose acquisition companies before. I think in 2023, there were over 21 bankruptcies involving special purpose acquisition companies that were not ready for prime time, that didn't have the balance sheets for them to become public companies. And that's why SPACs have gotten such a tarnished, and rightfully so, such a bad reputation, because the vehicle of a SPAC, a special purpose acquisition company, in many ways was an end run around IPOs, initial public offerings. So when you're an initial public offering, you have to get through certain criteria. You have to show your balance sheet. You have to, be able to show that you have a history of revenue. You have to be able to show EBITDA, earnings before interest, depreciation, taxes, and amortization. You got to show, your valuations are tethered to some multiple of revenue or some multiple of EBITDA or some multiple of something. So you go, okay, that's why this company's valued at 5 billion or 10 billion or 20 billion or 50 billion. Is it trading at 10 times? Revenue? Is it trading at 10 times EBITDA, 5 times EBITDA? What industry sector? Sometimes their valuations are viewed differently. But in an IPO, you're looking at corporations that mature to be able to go public in the IPO setting. The special purpose acquisition company concept, it's called a blank check company for a reason. The idea is you have this group of people who claim to be savvy investors who are asking individuals in this initial public offering in what's called an S1 process, hey, can you please give us usually $300 million. Give us $300 million. We're going to put that money in a trust account, and then we are going to go out and find a company. We haven't looked for the company yet. You're not allowed to. This is what Trump Media and Digital World Acquisition Company were dinged for before and had to reach the settlement. You're not allowed to have kind of merger negotiations or pre-negotiations before the S1 is filed. So you go to the market, you say, hey, give us $300 million, usually to savvy and sophisticated investors who have certain redemption rights as well. When they give you that $300 million, that's kept in a trust account. And then the SPAC, in this case, it's Digital World Acquisition Company, says, we're looking for this criteria. Digital World Acquisition Company said a company that's valued at $500 million to $2 billion. So if that's your criteria, you're usually going to be looking for a company that's doing, I don't know, somewhere above, $50 million a year in EBITDA. At least kind of $50 million a year in EBITDA. I would say if you're going to say it's a $2 billion company, probably more EBITDA than that. So you go out, you're supposed to interview all of these companies, and then you're supposed to go to the shareholders and say, look, we found this company that met the criteria. Here in this situation, it's my opinion, but I think it's in the documents that Trump Media does not meet the criteria. If I look at the criteria that's set forth, here's the acquisition criteria right here in the S1 by Digital World Acquisition Company. Target size. Consistent with our investment thesis described above, we plan to target businesses and total enterprise value from $400 million to $2 billion in the Americas, companies in the SaaS, technology and fintech and financial services, businesses with revenue and earning growth potential. We will seek to acquire one or more businesses that have potential for significant revenue and earnings growth through a combination of both existing and new product development, increased capacity, defensible market positions. We intend to acquire one or more business that have defensible market positions. I mean, how does Trump Media, how does Truth Social have a defensible marketing position? I mean, more people, I think, I'm pretty sure it's at least close to it. Almost more people are watching MeidasTouch YouTube videos in a day than I think are going on Truth Social like in a month. And it's fairly, or at least it's a fairly close number. I mean, you're talking about, not even more than 10 million signups in Truth Social. I think it's like 8 million people have even signed up for it. And in terms of like the actual unique visitors to the website, I mean, it's a very low number, as I said. Relatively. I mean, again, far more people are watching MeidasTouch than are on Truth Social. But, I don't go around saying this is $2 billion, this is $5 billion. So, I think that therein kind of lies the issue. But look, when you file these disclosure forms, so the S1 basically, as I said, is like the initial document that the company, that the SPAC files and says, we're out there in the market. Here's what we're looking to do. Here's what we're looking to do to kind of merge with this company. And then the S4 is, we found our partner. We're going to go and bring this partner, this private company, public. And when you take a look at the risk factors that are listed here, just take a look at like all of the red flags that are listed here in the that are listed here when it comes to Trump Media. Here's some of the ones that it said. A publicly traded entity controlled by Trump has previously been subject to cease and desist orders by the Securities and Exchange Commission. On January 16, 2002, the SEC issued a cease and desist order against Trump hotels and casino resorts for violations of the anti-fraud provisions of the Exchange Act. A number of companies associated with Trump have filed for bankruptcy. There can be no assurances that Trump Media Group will not also become bankrupt. That's in the filing. Entities associated with Trump have filed for bankruptcy. The Trump Taj Mahal, which was built and owned by Trump, filed for Chapter 11 bankruptcy in 1991. The Trump Plaza, the Trump Castle, and the Plaza Hotel, all owned by Trump at the time, filed for Chapter 11 bankruptcy in 1992. THCR, which was founded by Trump in 1995, filed for Chapter 11 bankruptcy in 2004. Trump Entertainment Resorts, Inc., the new name given to the Trump hotels and casino resorts after its 2004 bankruptcy, declared bankruptcy in 2009. While all of the foregoing were in different businesses than Trump Media Group, there can be no guarantee that Trump Media Group's performance will exceed the performance of those entities. A number of companies that had license agreements with Trump have failed. There can be no assurances that the Trump Media Group will not also fail. Trump Shuttle Inc., launched by Trump in 1989, defaulted on its loan in 1990 and ceased to exist by 1992. Trump University, founded by Trump in 2005, ceased operations in 2011 amid lawsuits and investigations regarding that company's business practices. Trump Vodka, a brand of vodka produced by Drinks in America under license from Trump Organization, was introduced in 2005 and discontinued in 2011. Trump Mortgage LLC, a financial services company founded by Trump in 2006, ceased operations in 2007. GoTrump.com, a travel site founded by Trump in 2006, ceased operation in 2007. Trump Steaks, a brand of steak and other meats founded by Trump in 2007, discontinued sales 2 months after its launch. While these businesses were in different industries than Trump Media Group, there can be no guarantee that Trump Media Group's performance will exceed the performance of these entities. And here's the thing. Show me the numbers. Show me the money. Show me the balance sheet. When I look at the Trump Organization's balance sheet and see for the 9 months ending in September 2023, you're talking about $3 million in revenue. Not even talking about profit. $3.7 million in revenue. And now you're trying to claim that this is a $2 billion business. The math don't math. So what does this all mean? In my opinion, the question becomes, when is the crash? That's the question. And again, my view of it is based on the data, is based on the numbers. That's where I'm forming my opinion. I could be wrong in my opinion, but when is the crash? Who's going to hold the bag? Will it take place during the 6-month lockup period where Trump is locked up? What is going to happen there? That's, to me, the next key data. I think this will be approved at the shareholder meeting. We'll see what happens next. But to me, that's why this is a disaster for the retail shareholders and people who are going to play this thing like a meme stock. There's a reason why these other special purpose acquisition companies failed, that were not ready for prime time. This is clearly not ready for prime time. So we'll keep you posted. Let me know what you think. Hit subscribe. Let's get to 3 million subscribers. Have a good day.
Hey Midas Mighty, love this report? Continue the conversation by following us on Instagram @MeidasTouch to keep up with the most important news of the day. What are you waiting for? Follow us now.